Good afternoon. My name is Ernest Oshodi. I'm going to be taking you through ACC 223, which is known as cost accounting. Cost accounting was seen as a technique for ascertaining the cost based on historical cost. In the course of time, due to the competitive nature of markets, there was need to place emphasis on cost control. Now, because of that, cost accounting has become more of cost control than cost determination. Now, in this session, we're going to be looking at issue bordering on the concept of cost accounting, the nature of cost accounting, the type of pricing system, and so many others, and the difference between cost accounting and financial accounting. Now, having said that, I would like to go straight to the conceptual clarification of cost accounting. Now, cost accounting can be described in various ways, but the popular definition that is being propagated by many authors is built around cost. Now, this they do by bringing cost and accounting together. Now, the first question you ask yourself when you want to define cost accounting is, what is cost? Now, cost is seen as the economic resources used in the production of goods and services, right? Now, the process of determining, the cost that is being expended in the process of producing goods and services is what is actually known as cost accounting. Okay, it is important for you to know that the modern management of accounting is becoming more and more difficult to draw a clear-cut line between financial accounting and cost accounting and management accounting. All right. Now, the objective of cost accounting, the objective is to provide relevant information that enable management to carry out its function creditably. Cost information is applied in a number of ways to achieve planning, control, evaluation, and decision making. Now, planning. Cost data is very, very vital in planning processes. Budget and forecasting, for future operation depend on cost data. Now, both tactical and strategic plan are developed from cost information, and the plan serves as a guide to achieve the organization's short and long-term objective. The control. Now, budget estimates is prepared based on cost, which is usually checked against estimates to see if what was planned for is being achieved or not. Now, evaluation. Cost data is used in the process of evaluating a firm. Now, the accumulated cost data is analyzed and used to prepare what we call the profit or loss for the period. Now, this analysis can be used to evaluate the performance of a segment or the whole organization. Cost accounting can also be used to make informed, decision. Cost data that is provided to the managers enable them to make informed decision on whether to invest on a particular business. Now, I will say that I'll go straight to the quality of good cost statements. Cost statements are prepared to provide manager with relevant data to plan operation, control action, and make decision. Cost statements must be must necessarily have the following quality: A, timeliness; B, relevant; and C, simplicity. Now, an information that is not timely is not useful for decision making. In other words, information must reach the management before it becomes stale, right? In other words, a stale information cannot be used to make a decision. The second quality is relevance. Only relevant information should be given to managers when they are saddled with the need to make a decision. Only relevant information to the decision that they are supposed to make should be given to them. In other words, both key information and irrelevant information should be extracted from the information that is provided to the manager for the purpose of decision making. Simplicity. Now, cost data must be simple and descriptive in nature. The use of statistical formula should be discouraged as much as possible. A good cost information must be simple to understand. Advantage of cost accounting information. Since the objective of costing is to determine the unit and the total cost of a product, it provides vital information for price determination. In other words, costing is the very foundation of price determination. Two, when the cost and price of a product are compared, managers or management uses the information to decide on elimination of non-profitable products or expanding the existing profitable ones. 3. Cost information review the cost of increase or decrease in profits shown in financial accounts and guide management in deciding on how to improve performance. Costing provides management with information on specific issues such as make or buy decision, where there is idle capacity, production mix under resources constraints, break-even point figure, etc. Advantage of cost accounting. Cost information serves as a basis for preparation of contract price as the main source of information for adjusting the agreed contract price. 2. Cost information align the problem of overhead caused by idle plant capacity to enable management take decision on the best alternative. Use of cost accounting information. Cost information is primarily designed for the internal management use. The cost data provided are used by management for different purposes, which include the cost per unit or the total cost of production. Is used by management for price decision, production planning and control. Cost of running a section of departments for planning is also provided by cost accounting information. Material, labor, and overhead costs are used to control purchasing department material usage and efficiency. The cost of scrap and rectification of effective goods are used to determine the efficiency of production personnel, unit and total cost of production and material usage. Cost data and price determination. Like I have earlier said, cost is the foundation of price determination. Now, before a price is determined, a price of a goods or goods is determined, the cost of the unit produced must be taken into consideration, and thereafter an allowable margin can be added to such costs to determine the price that will be fixed at the end of the day. Now we have different type of pricing. We have the prevailing market price, we have transfer pricing, we have contract price or pricing or quotation, then we also have the break-even pricing. Now the prevailing market price is the price that is dependent on the interaction of both the demand and the supply. Now the price is fixed depending on the direction of the demand and supply. If the demand tends to be higher than the supply, it means that the price will shoot up, while on the other hand, if the demands tend to be lower than the supply, the price will shoot down. We also have transfer pricing. This type of pricing is used in big organizations that transfer their products to different units or different branch. Now the price with which material is being transferred from a unit to another unit within the same organization is what is known as transfer pricing. We also have, contract pricing. Now, contract pricing is fixed, having accumulates all the costs that is necessary to execute a contract. Now, after that, a margin will be added to be enough to cover as a profit. And by the time you add the margin and the cost, you have what we call the contract price. Then we also have the break-even pricing. Break-even pricing is the price that is set to cover, the cost of production without making provision for profit or loss. In other words, it is that price that will just be enough to cover the cost of production. Now, it is normally built around the marginal costing system. Now we have the difference between cost accounting and financial accounting. Now, one of the difference is legal requirements. Tax law, company law, and stock exchange requirements make it mandatory that financial accounting must be prepared at the end of every year. But whereas in the case of cost accounting, there is no such law that mandates the preparation of cost accounting. Another area of difference is the standard rules. Financial accounting is guided by general accepted accounting principle or laws. Now, there are very, very many in financial accounting. We have concepts such as margin concept, we have consistency concept, we have the objectivity concept, and so on and so forth. But in cost accounting, there is no such standard guiding the preparation of cost accounting information. Then we also have another area of difference, which is known as focus. Now, financial accounting focus attention on the entire organization. By so doing, it take a look at the summary of the transaction that occur in an organization. While on the other hand, cost accounting is focused on different units within the organization, and the essence of focus is detail. Unlike financial accounting that look at the summary of the transaction, cost accounting look at detailed information emanating from each of the cost center or unit in organization. Then we also have frequency of report as another area of differences between cost accounting and financial accounting. The frequency of reports. In financial accounting, reports are usually prepared once or twice in a year, which is probably known as annually report or biannual report, although we also have quarterly reports. But in the case of cost accounting information can be prepared at any time. It can be on daily basis, it can be on a weekly basis, it can be on fortnight basis, and so on and so forth. Then we also have the target user. It's also an area where you can look at the difference between cost accounting and financial accounting. Now, financial accounting reports are targeted mainly to the outside user, such as shareholder, government, investor, creditor, etc. While cost accounting reports are mainly directed to the management of organization. In other words, cost accounting information does not go to the outside user, but is directed to the management of organization. Then we also have the units of measurement. In financial accounting, emphasis is usually placed on the monetary units of measurement, while in cost accounting, both the monetary units and the quantitative unit is used. In section 1, you have learned that cost can be defined as the value of economic resources used in the production of goods and services. The arts and sciences of determining these resources that is used in production of goods and services is called costing or cost accounting. Now we also look at the objective of cost accounting, and we said is to provide relevant cost data to enable management carry out its function creditably. Okay, cost information is applied in a number of ways to achieve the goal of an organization. Cost information is primarily designed for internal management use. The cost data provided are used by management for different purposes. Now, the development of integral accounting has bridged and reconciled the two sets of accounting information. The objective pursued by the two branches of accounting are still evident in practice in the following area: 1. The legal requirements. 2. Standard rule. 3. Focus. 4. Frequency of reports. 5. Target user. 6. Units of measurement. Self-assessment question. We have some self-assessment question for section 1. For section 1. Now that you have completed this study session, you can assess how well you have achieved its learning objective or outcome by answering this question. Write your answer in the study diary and discuss them with your tutor at the next study support meeting. You can check your answer with the notes on the self-assessment question at the end of the module. 1. Explain in your own words the term cost accounting. 2. Discuss management function which require cost accounting information to carry out. Explain any 4 types of price that you know and how cost data is useful in arriving at the price. 3. What benefits do you think management will derive from cost accounting?